Ladies and gentlemen, good day and welcome to the Ester Industries Limited Q4 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Gavin Desa from CDR India. Thank you, and over to you, sir.
Thank you, Darwin. Good day, everyone, and a warm welcome to Ester Industries Q4 and FY24 Analyst and Investor Conference Call. We have with us today Mr. Arvind Singhania, Chairman and CEO, Mr. Pradeep Kumar Rustagi, Executive Director, Corporate Affairs, Mr. Girish Bahl, Business Head, SBU, and Mr. Saurabh Agarwal, the CFO. Before we begin, I would like to point out that some statements made in today's discussions may be forward-looking in nature, and a note to this effect has been sent to you in the invite earlier. We trust you have had a chance to go through the documents on financial performance. I would now like to invite Mr. Arvind Singhania to make his opening remarks. Over to you, Mr. Singhania.
Thank you, Gavin. Thank you, Gavin, and thank you, everyone, for joining us today. I will briefly talk about the key business developments, post which Pradeep will walk you through our financial performance. I would like to begin the call by talking a bit about our JV with Loop Industries, Inc. You all may be aware that we recently executed a 50-50 joint venture agreement with Loop Industries. The purpose of the JV is to build, own, and operate a manufacturing facility in India. This manufacturing facility will produce a unique product offering of lower carbon footprint, recycled dimethyl terephthalate or RDMT, recycled monoethylene glycol or RMEG, and convert part of these products into various specialty polymer grades for various applications. Loop's patented technology offers significant advantages over traditional mechanical PET recycling. Let us talk about the significance of this JV and why we believe it's a game-changing development for our company. In simple terms, I will try to explain what this JV aims to achieve and what is the potential of this initiative. This technology is gaining a lot of traction because sustainability nowadays is at the forefront of every company's agenda, especially consumer-branded product companies. Using products made from recycled inputs is largely the way to achieve sustainability. Mechanical recycling is the technology that currently is being used to recycle PCR PET bottles. PCR PET bottle is the only material that is being used to produce recycled feed through mechanical recycling process for manufacture of PET bottles, polyester fiber, and film. Now, if you think about it, mechanical recycling is not offering full circularity in true sense. It provides circularity as far as bottle-to-bottle conversion goes, but it is not able to offer the circularity in other products like fabric and garment because the input feed is PCR bottles. PCR bottle scrap, while the output is PET for bottles, fabric, or garments. Loop patented chemical recycling process will be able to use any kind of used polyester waste, whether adulterated or unadulterated. Products manufactured through Loop technology will enable the consumer-branded product companies to achieve full circularity. Under this technology, we will be able to use PCR PET bottle scrap, yarn, or fiber to produce RDMT and RMEG for production of PET polymer for PET bottles, polyester yarn, fiber, or film. So, this chemical recycling is the only technology which will give you full circularity. Mechanical recycling technology, which has been existing for the last many years, has its limitations. DMT and MEG, the specialty DMT and MEG specialty chemicals global market size is huge and is estimated to grow at a CAGR of about 4% through 2033. Low carbon DMT and MEG are in high demand, but available options are limited and costly. This opportunity offers immense potential to grow and scale up the operations. Loop technology is the only technology that has reached ready for commercialization stage. The other key trigger is that the governments across the world are pushing towards recycling, sustainability, and zero waste policies. As stated in the investor presentation, we expect the JV company to commence commercial operations in early 2027. The project is estimated to be set up at a cost of $165 million. The funding for which will be in the form of debt and equity in the ratio of 60-40, with Ester's equity commitment in the JV being $33 million or 275 crores. we will be approaching the capital markets to raise funds through the equity route for this investment. We expect the project to generate an IRR of about 25% and equity IRR of 35%, translating into a payback period of about 5 years. To start with, JV company will annually produce 70,000 tons of RDMT and 23,000 tons of RMEG, which will be scaled up over time. JV combines loops, cutting-edge technology, and access to global brands with Ester's nearly 40 years of experience in polymerization, operational prowess, and local expertise. Having said that, let me now talk about the performance during the fiscal year gone by. As mentioned in our earlier calls, the external environment remains challenging for film business as anticipated due to temporary demand-supply imbalance. Financial performance of film SBU for the Q4 FY24 and FY24 are reflective of the business grappling with the challenges. While near-term challenges and pressures on margin persist, our optimism about medium and long-term prospects of the business are reinforced by growth in demand at a healthy rate and plastic waste management rules that are slated to be effective from 1st April 2025. The plastic waste management rules mandate 10% recycled content in the flexible packaging laminates. This regulation will further boost the demand for polyester film, with conversion taking place from other substrates to polyester because other substrates cannot offer recycled content. Regarding specialty polymer business, we have started to witness gradual pickup in volumes of some of our marquee products trending higher. Demand has seen some revival and is showing early signs of stabilization. Moving on to individual businesses, starting with specialty polymer, as mentioned earlier, we did witness some improvement during the quarter over Q3 FY24. Offtake for some of our marquee products, namely MB03 and innovative PBT put together, grew 20% on a sequential basis, with actual volumes of both products for the fiscal being 1,719 tons. In addition to these products, we are also witnessing good traction in some of our recently introduced products. Our product pipeline as well remains encouraging. As you may recall, this business is largely IP protected, and as such, the threat of competition doesn't arise. The softness in the business was largely owing to the demand uncertainties that prevailed in major markets for these products because of a recessionary trend. We are positive about the prospects of the business and expect FY25 to be much better year in terms of sales, in volumetric as well as value terms and profitability. Moving to our film business, the market has experienced a surge in capacity due to commissioning of new production lines in the last 2 years. As a result, supply has significantly exceeded demand, despite demand growth remaining strong and domestic demand increasing at an annual rate of more than 13% per annum. This imbalance has caused a decline in both prices and margins. For the quarter, consolidated sales volume reached 20,000 metric tons, with 13,048 metric tons on a standalone basis and 6,954 metric tons from our subsidiary. While we estimate demand-supply gap to bridge gradually due to continuous growth in demand, we estimate the pressure on pricing and margin will persist in the short term. Accordingly, we are taking steps to improve product mix besides continuing our thrust on improving operational efficiencies and cost rationalization to cut losses of the business. On a standalone level, we have seen our share of value-added products at 28% during the quarter. In conclusion, we believe we are well positioned to create value for our shareholders as fundamentals of both the businesses remain firmly intact. The JV with Loop is a game-changing development which will charter a path of profitable growth for the company for years to come. That concludes my opening remarks. I will now hand over the floor to Pradeep to walk you through our financial performance. Thank you.
Thank you and good day, everyone. Thank you for joining us on our Q4 FY24 earnings call. Let me quickly walk you through our financial performance, post which we can commence the Q&A session. Revenues on a standalone basis stood at 216 crores as against rupees 252 crores in the corresponding quarter last year, lower by 14%. The primary reason for the degrowth is the pressure on pricing and margin that is being witnessed in the film business. You may have noticed that performance of all the players in the BOPET film space has largely been lower due to higher competitive intensity, which has resulted in severe pricing pressure. Specialty polymer business, on the other hand, did witness good pickup on a sequential basis. EBITDA for the quarter stood at rupees 9 crore as against 19 crore generated in Q4 FY23, lower by 53%. Margin for the quarter stood at 4% as against 7.4% during the corresponding quarter last year. The business incurred a loss of rupees 9 crores during the quarter as against profit of rupees 3 crores generated during Q4 FY23. Lower profitability and margins during the quarter are largely owing to the subdued performance of our film business. Moving on to the performance of Ester Film Tech, our wholly owned subsidiary. Revenue for the same stood at rupees 76 crores for the quarter. In terms of volume, FY24 generated sales of 6,954 metric tons. With time, we are confident that Ester Film Tech will contribute positively to the overall growth of the business due to its low operating cost. As mentioned previously, the plant is expected to generate revenue worth rupees 500 to 550 crores upon achieving optimal utilization and sales at reasonable price oblique margins. In summary, as mentioned by Arvindji earlier, we are all excited about the JV with Loop Industries. We believe it will transform the entire profitability profile of the business. It is really a exciting opportunity for us, and we are making concerted and focused efforts towards ensuring that it progresses as per plan. With regard to our existing film and especially polymer business, while film business may see some pressure in the short term, we expect especially polymer business and film business to perform much better in FY25. That concludes our opening remarks. We can now commence the question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to please use handsets while asking a question. Ladies and gentlemen, we will now wait for a moment while the question queue assembles. The first question is from the line of Krishna Parekh from Dolat Capital. Please go ahead.
Hello, good afternoon, team. I have a couple of questions. First is on how is the environment for the BOPET film business, and when do you see stabilization in demand and supply situation over there?
The situation is far better than earlier because the demand, the growth in demand for polyester film has been very, very good. In fact, it is actually more than 15%, although we mentioned 13% in our speech. But it is in fact more than 15%. So it is getting better day by day, and very soon we will see that this overhang will be over maybe in the next couple of quarters. And because of the plastic waste management rules implementation by April 2025, the demand for polyester will increase further because other substrates will not be able to offer a recycled content in their film.
Okay. Thank you. So my second question is, what is the specialty polymer business size of the specialty polymer business over the next 3 years?
So this year, last year we did
100 crores.
About 100 crore turnover, and this year the target is to almost double that number. Near double that number for this year. And I think over the next 3 to 4 years, we can look at a turnover of about 350 to 400 crores.
Okay, thank you, sir. That's all from my side. All the best, team.
Thank you. The next question comes from the line of Jainam Gilani from Swan Investments. Please go ahead.
Hi, sir. Thank you for the opportunity. So could you please help us understand the current demand-supply dynamics in BOPET, and how do we see the movements in the spread going forward?
Okay, so the demand-supply gap, it has reduced substantially, and I would now imagine that the overhang is about 15 to 20%. That's about it. And I think we will start seeing improvement in spreads over the next couple of quarters.
Okay. And so we were planning to have our FY25 mix for value-added products to around 30%. So what could be our incremental margins as compared to the normal film business?
You want to know because of the value-added products, what would be the value addition per kg of film?
Yes.
Yeah, incremental. So I'll just give you the numbers. So suppose we are getting 15 rupees in the domestic market as on the commodity film. The blended BA in the export market for the same would be about 65 to 70 rupees because of the value added films. The metallized, the plain film in the domestic market, because the component of value added product that is getting sold in India is not much. The incremental value addition is about 6 rupees. Against 15 rupees, we will be getting 2021 on an overall basis.
Okay. And so for a JV, as you had mentioned, since you already have debt, how are we going to fund the investment?
I already mentioned in my speech that we'll be approaching the market for raising capital.
That's it from my side, sir. Thank you.
Thank you. We have the next question from the line of Deepak Malhotra from CapGrow Capital Advisors. Please go ahead.
Yeah, hi. Am I audible?
Yes,
sir, you're not clear, sir. You have muffled audio coming through.
Okay. Let me come on the phone. Just checking with you. Yeah. Is it better now?
This is much better, sir. Please go ahead.
Yeah. Thank you. Arvindji, few questions on the industry outlook, actually. If we see, over the last 30, 40 years, since 1980s, when everybody set up the plants, and when you did a convertible 10 million bond issue in 1997, I don't know if you have even recall that. Okay, so I've been following your company for very long, over 30 years, the sector. Now, what I see that in between we have, obviously, it's a cyclical industry, so you have crusts and troughs. The last one, what we had, major one, was in around 2012. And even in 2016-17 also, we had issues. But now this time, the down cycle has a very, kind of been prolonging, I would say, scenario, which we haven't seen in the past. I mean, the spreads have come down for everybody in the industry. The EBITDA margins are at kind of bottom, and things don't seem to be improving of late. While I'm sure there is a commentary from your side which is basically kind of posting a positive scenario going forward. But are you actually seeing any green shoots on the ground, sir?
Yes, we're starting to see some green shoots on the ground. And that is why I'm confident that over the next 2 to 3 quarters, you'll start seeing an improvement. The demand-supply gap has come down.
Because what we hear is that when we compare PET film versus BOPP, then the situation in BOPP is much better as what the industry experts are talking about. But
you're absolutely right. Right now, the demand-supply gap in BOPP is far more favorable. But I think a lot of new capacities are expected in BOPP over the next 12 to 18 months. Both the industries don't have to run parallel to exactly what's happening. So we went through a phase of very high capacity growth over the last 2-3 years, and now this will be experienced by BOPP in the coming year or so.
So when you talk of the value-added products, I think you referred. What micron film are we talking? 10-inch, 12-inch?
It's on various microns. It's not 1 micron. The value-added products are on various microns.
So, you mentioned about, if I got it correctly, you mentioned about a spread of 21 rupees per kg for the specialty one or the metallized one. You referred to.
No. I mentioned the plain commodity film 12 micron gives about 15 rupees over raw material cost. The blended VA for the plain film in the domestic market, the value added and the commodity put together would be about 21, 20.
Over and above 15.
Over and above, no.
Sorry.
15 will become 21, so we get 6 rupees extra. But in export, since majority of the volume of VAS film, value added and specialty film is getting sold in the overseas market, there the incremental is about 40 to 50 rupees a kg. So we get about...
Yeah, go on. Sorry, complete your point.
Yeah. So in export, we are getting, let's say, close to 20-21 rupees. In the value-added film, we'll be getting 65 to 70 rupees.
65 to 70.
Blended.
Okay. So, yeah. So now, while this is definitely a good attempt to increase the value add, as you mentioned earlier also, but are you seeing any further capacity expansion by other players? I mean, if we say any domestic players or internationally, because 60% is anyway, production is by China and India. So that kind of creates a lot of effect. Yeah.
So domestic, there is no more capacity coming up for the next 2 to 3 years.
Okay. And internationally, does it have any effect?
By the time the next line comes up, there will be a shortage. So that new capacity will be required.
Okay. And in terms of the margins, if we see, we are at the rock bottom, EBITDA margins or the EBIT margins, the way you are reporting. So in the past, I think we have obviously seen double-digit margins, right? So, what kind of trajectory you feel, we're going to follow now going forward? Is it going to be next 6 months, 18 months, 24 months? I know it's difficult to take a call, but what's your feel, sir?
I think as far as the EBITDA margins are concerned, you will see a substantial improvement in FY25, and I think we should be reaching a state of near balance in FY26, halfway through FY26.
And do you also see the capacity utilization improving for yourself? Because in the Telangana plant, I think it's still, last time you mentioned it between 50 to 60%, and now also I'm sure the situation continues the same. So how is it going to look forward?
I think going forward we'll start seeing improvement and reach about 75% capacity utilization in Telangana and in Katima.
On a consolidated basis, the capacity utilization was close to 70% if we club Telangana and Katima.
Which will now improve to 75 to 80% over the next couple of years.
And your outlook in terms of the industry situation improving by FY26 or by the end of FY25, is it based on this 10% plastic rule which you referred to earlier also? And how seriously will it be implemented, sir?
How seriously it will be implemented is a question for the government. It's not a question for me. But I think the government is very serious about implementing it. That's our understanding. And yes, the growth in demand is both. One, the organic growth in demand, which is coming naturally, which is, in my opinion, more than 15% per annum. And plus, of course, it will be supplemented by this PWM plastic waste management rules, which will I think other substrates cannot offer any recycled content, so it will be favorable for PET.
I have not understood, even in the earlier calls you have mentioned that it's not possible for BOPP, to offer this 10% recycled element. Why is that so?
Why is that so? I have no question. It's just not available, in my opinion. In our opinion, it's not available. The technology for that, for a viable, there may be some small volume available, but what our understanding is that so ridiculously priced that it cannot be it will not be commercially viable. And even the volumes that are available are not enough. So it is our understanding that other substrates cannot offer recycled content while polyester definitely can.
Okay, because you spoke of a switchover from BOPP to polyester film over the last few calls when we talked about the issue. So I was a bit surprised that why will people shift, because otherwise, these are two quite competitive products which are well established, for quite long. And they have their own.
If the government mandates 10% recycled content, how will the consumer or the brand owners fulfill that mandate? Please tell me. If there's a need for a 10% recycled content and BOPP cannot offer it, then how will the brand owners fulfill their commitment? They have no choice but to come to polyester.
Okay. Now, my other question is on the 100 crore issue, which you did the preference one. So is that already been completed and has all the funds come in?
The money came in before end of March.
We received the final approval from the stock exchange. The shares have already been allotted and listed.
And the money is in the bank. It came end of March, the money.
28th March. That's right.
Okay. One more question. What is really the final, plan you have? Because now you have 2-3, very strong investors, investing in the company. And so what is really the future outlook in terms of, how do you foresee basically the business going forward? Why have we really invested, in the company? What is the outlook, business outlook?
Well, first of all, like I said, that the polyester film business is likely to turn around in the next 5. It will definitely improve substantially in this year and turn around next year. Specialty polymer business is poised for very good growth. And the game changer, of course, is going to be our joint venture with Loop for the chemical recycling business. That's going to be a complete game changer for the group.
But this Loop technology, has it been employed by anywhere else in the world? In that sense?
Not at commercial scale, but at a small commercial scale. Loop has a plant in Quebec, Canada, which they've been operating for the past many years. And we have been working with Loop for the past, it's a 5,000-ton capacity plant. And they've been operating this plant for the last 4 years and continuously producing recycled DMT and MEG. A lot of that DMT MEG has come to our plant in Ester, where we have converted into various grades of polyester polymer for bottles, for fabric, fiber, garments. And these products have been tested at brand owners' places, and from many places we have already got approval for quality.
Okay, great. One final question. In terms of your debt, I think in the past you have indicated that the number is about 750 gross and the net is still about 600. Is there any change in those numbers?
No. So on 31st March, exact number is 780 crores. The gross debt, and if you consider the cash and FD, etc., the net debt, net of liquid investment is about 610 crores, including working capital. Hello?
Excuse me, sorry, the current participant seems to have dropped from the queue, sir. We will proceed to the next question.
Yeah.
We have the next question from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yeah. Namaskar, Singhania ji. Namaskar, Rastogi ji. Hope you are doing well now, sir.
Yeah, fine. I'm getting better.
Yeah. Sir, Rastogi ji, if you could give me the details of the current work in progress, capital work in progress, which we have the closing balance.
The capital work in progress as on 31st March 24.
Yes. It is pertaining to which segment? And when it will get capital? 83 crore is the closing balance.
Major maintenance capex in Khatima. So I'll give you the amount just looking at the numbers. In the meantime, we can discuss other questions.
Okay, sir. And sir, the color on the raw material mix also. How are the raw material prices currently?
PTA and MEG has been very, very stable since last many months. It is the per kg of chips, the PTA and MEG cost has been in the range of 80 to 82 rupees. So quite stable.
Okay. And the breakup, sir, PTA price trend कैसा है? MEG का price trend for the last quarter?
PTA prices are about, let's say, between 75 and 74 rupees. MEG is about 51 and 49 range.
Correct. And sir, you mentioned the net debt number at 610 crore.
610, including working capital, both fund-based and non-fund-based.
Okay. What is our cost of funds, sir, currently?
About 9.5 to 10%. And this is for Ester Industries. The cost of debt is lower in Ester Filmtech because we have foreign currency debt there sitting in the balance sheet.
Okay. And then, sir, there is any foreign money, the conversion cost also, MTM that we have booked last year?
During the year there was MTM, but it was a gain.
Can you quantify it, sir? Absolute number?
Yeah, I'll just share the number.
And also, sir, what is the current maturity, sir?
40 lakhs. So December quarter there was a negative. In March quarter there was a big positive. Overall for the year it is only marginal, about 30 lakhs positive.
Okay. And what are our current year maturity, sir? इस साल क्या payable है?
So in Ester, it is about 60 crores, 64 crore, and out of that we have already paid till 22nd May about 27 crores. In Ester Filmtech, it is including the foreign currency debt and the rupee term loan. Only the term portion is about 366 crores. And repayment is about 53 crores.
Okay.
In Ester Filmtech, the wholly owned subsidiary.
And for Filmtech, how are we going to fund the maturity?
So we have the support from the parent company because it's a wholly owned subsidiary. So Ester will be providing adequate and timely support so that there is no delay or default in servicing the debt.
Okay. And the fundraising which we have done, sir, what was the total fund? I think so 100 crore was raised?
100 crore.
And how are we going to utilize? We have paid from those funds only for till May of the first quarter.
So when the issue was done, there was a amount given in the 50 crore is for repayment of term loan, 30 crore for investment in subsidiary, and 20 crore to be used by Ester Industries for its operations.
Okay. And all the funds have been deployed to the use.
Yeah, we received and we are using those funds now for repayment and for operations in Ester Industries and for investment in subsidiaries.
Right. Singhania, when you spoke about specialty polymers revenue, correct me here, doubling to 200 crore levels for FY25. What gives you the fillers of doubling of top line? Where is the positive?
Because we have already started seeing improvement from the last quarter of FY24. And with going by the current run rate, we feel that it's not about 200, but at least 180 to 200 crores we'll definitely do this year. Against 99 or 98 crores last year.
Okay, and these are specific to those MB4 products only, wherein we'll see more traction?
Yeah, of course. The two products are the main products, but apart from that, there are many. There's some volume in many other products as well.
Okay, but sir, you outlined earlier that it was the US recessionary trend, the interest rate scenario. As of now, the data points do not show any change in the commentary what was articulated earlier. So what has resulted in this optimism?
We couldn't understand you. We couldn't understand the question. It was muffled. Sorry. Can you repeat?
I will repeat, sir, definitely. Sir, earlier in your commentaries, you spoke about recessionary trends in US and Europe and the high interest rate regime resulting in the lower demand in this specialty polymer segment. So what factors have changed currently, because neither the interest rate has reversed nor has any sentiments improved. So what has led to this improved demand, and how sustainable are the factors on which this demand has come from?
There was a recessionary trend in the US which everybody knows. And more than that, we learned later on that more than recessionary, it was also a destocking because of at the time of the COVID and later on, a lot of inventory had built up. So there was a lot of destocking going on as well, which caused a lower buying. And now everything seems to be normalized, and the customer is telling me that demand is going up. So we have to take it on face value what the customer tells us.
And this will get reflected in the June quarter results also.
Right, sir. Only to dwell lastly on this point is that we get an annual program from our customers in terms of what the deliverables are likely to be, or are they done quarterly?
Yeah. So we get some sort of a forecast, and we're basing our things on the forecast given by them.
Correct, sir. And sir, then for the Ester Filmtech, our Telangana part of the story, therein, sir, I could not. I missed your commentary on how the performance have been from the subsidiary, and and what would likely change there going ahead in terms of utilization levels and the profitability?
See, the utilization levels last year were very low. We expect the utilization levels to go up this year because of the increase in demand. And in the next couple of quarters, we also expect to see an improvement in margins because of demand going up and the demand-supply gap coming down. So we definitely, I can't quantify it exactly because that's very difficult to predict. But we definitely see improvement in this year.
And lastly, sir, the finance cost and the depreciation line items are likely to be in this region of 70 crore only for the current financial year?
Yeah, it is likely to be in the ballpark. With repayment, there will be some reduction in the interest cost, but depreciation is by and large going to be same.
Okay. And as the earlier participant asked about our investment from marquee investors like Modi Rubber and RJ Corp, if you could, if it is proper for you and opportune time also, if you could allude to us, what has led to this investment, and that too, sir, for the sphere line of things for them, the investment of 25 or 30 crore is not a big sum in terms of the space where they operate. So if you could give us some understanding what led to conclude to make investment in Ester.
Very simple. They saw great potential, future potential. As simple as that. अगर potential नहीं दिखता तो कौन पैसा लगाता?
Everybody looks for good returns on the amount invested. So they saw an opportunity to make get good returns, and therefore they invested.
Right, sir. And do they have any line of further investment or line of credit line for the company going ahead, where they would like to infuse more fund, or with the loop transaction now into 4A, does that give further understanding, since you are alluding to the fact that you will be raising capital?
I have no comment on that right now.
In any case, this is unpublished fact that this information cannot be disclosed at this stage.
Correct, sir. Thank you, sir, for all this, all that reply, and we hope to hear from you going forward. And all the best, sir. Thank you.
Thank you. The next question comes from the line of Divi Agrawal that's an individual investor. Please go ahead.
Hi, sir. Am I audible?
Yeah.
So, I just wanted to know the reason why the finance costs have gone up despite our borrowings going down.
So there was some increase in the interest rate. That's one. The utilization of the working capital limits also increased during this period, and because of this, the interest cost has gone up.
Okay.
And the utilization during the year has increased.
Okay, but during the year we have also repaid the loan. Fine. My second question is related to
few loans were raised, and so in the later part of March 23, we raised certain loans. The full effect on the interest cost came in this year. So you cannot compare balance sheet to balance sheet, because the balance sheet would also reflect something which was received in the month of March 23. So the interest cost is the reason that I have told you is the correct reason. Marginal increase in the interest cost is on account of the increase in the rate of interest.
Okay, got it, sir. And my second question is related to the specialty polymer. So now we have a capacity of 30,000, and now that we have a capacity utilization of around 8 to 10%. So do we have any plans to increase the capacity further in the specialty polymers?
We are not increasing capacity anymore right now until we already have enough capacity available. There is no need for any further capex at this stage.
So in next 4-5 years we won't increase the capacity?
See, we can't predict 5 years, dear sir.
So as of now there is no.
Suppose tomorrow there is a huge increase in demand and volume capacity utilization goes up and there is a need, we will invest.
So if the investment is justified, we'll go for it. Otherwise, there is no plan.
So, okay. So once the loop, the JV kicks in, so the demand would go up, if I'm not wrong. So then also we won't need additional capacity. That the capacity that we have is sufficient?
3 years, that is 2.5 years away. So we have to see how the demand grows for specialty polymer. If there is a need, we will invest. As of now, we don't need to invest. It's very difficult to predict 3 years in advance.
Okay, so to double our revenue, we don't need to increase our capex,
we don't need to put any capex to double our revenue from now.
Okay, sir. And my last question is on the BOPP and BOPET side. So now if we assume our BOPP and BOPET demand, domestic demand is around 7 lakhs in BOPP and 7 lakhs in BOPET. So when the
BOPP, we don't have any BOPP.
Cool, sir. Thanks.
Thank you.
Thanks a lot, sir.
Ladies and gentlemen, if you wish to ask a question, you may please press star and 1. The next question comes from the line of Deepak Malhotra from CapGrow. Please go ahead.
Hi. First of all, let me apologize. My line got disconnected, when I was asking the last question. I don't know if you subsequently answered that, so I missed that. That was on the debt. So you were mentioning that there is 780 crore of debt. So how much is the net debt and how is the debt repayment schedule looking, please?
So this question was raised by some other person also. The net debt, that is about 610. On the repayment obligation for the year 24-24, in Ester Industries it is 64 crores and 53 crores in Ester Film Tech. So all put together is 117 crores. Out of that, we have already repaid in advance about 27 crores to the term lenders of Ester Industries.
Okay, because if we look at, the current expansion program which you are taking, for the loop JV project, there also it's almost 1,300 crore plus. So in terms of financing the project, how is it being tied up? And how is it going to look again in terms of, debt repayment and if there is going to be any pressure on the balance sheet on that front, please?
The JV is a separate company. It's going to be a separate company. It's going to be owned 50-50 by Ester and Loop. We will invest about 275 crores each into the equity of the company. The rest will be a debt taken on by the JV company. That debt is not going to be on Ester's books.
Okay, great. I think that answers my question. And one more, if I can slip in, since I think everybody is trying to understand about the expected recovery, in the industry, what are the end sectors, which are actually exhibiting any kind of green shoots? Is it the FMCG sector in terms of packaging, or somewhere else you are looking at demand coming back?
हमारा तो largely सारा FMCG consumption है. Largely our entire demand comes from the FMCG.
Yeah. Okay. So you are seeing good traction there, sir?
Yes, we are seeing demand growth. We're seeing solid demand growth in polyester film.
Because my concern is that we have not seen this kind of a down cycle, going for so long. Normally it has recovered much quicker. Correct me if I'm wrong.
Earlier, please understand the circumstances before were different. At that time, your total capacities were much less. The total expansions that were done were lower. This time, as a percentage, the total capacity expansion has been very, very large.
Because in the past, you have indicated that this gap was almost 30-40% higher when we talk of at least domestic market, the overcapacity. So now you refer that it is going to be about 15-20%, right?
As of now, we stand at about 15 to 20% gap in terms of demand supply.
And there are even no significant imports, correct?
No.
Yeah. So that okay. Okay. So basically, what we are saying is to recapitulate is what we are saying that from FY26 we'll definitely see the recovery. While the green shoots will start.
No. We'll see recovery from FY25 and FY26. I think should be a good year.
Okay. Great. Thank you so much. Thanks for your time, sir.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. We have the next question from the line of Nishant Shah from MK Global. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. So my basic question is, we have done a capex of around 70 crores. So how much is the maintenance capex out of that?
Maintenance capex is about 20 crores.
Okay. And this will be the run rate going ahead also?
Run rate for?
FY25 and 26?
Yeah. Run rate for maintenance would be in the range of 15 to 20 crores. Yeah.
Okay. And how much capex you envisage for 25 and 26?
20?
25 and 26 capex.
25, 26, 25.
Right. 25, FY26 capex is not yet finalized.
So we have not yet finalized those numbers because we would be monitoring the performance and the liquidity position, and then we'll decide.
Okay, fine. And sir, another basic question is, can you give me the breakup of a CWIP? Somewhat even asked earlier also.
Yeah. So we invested certain amount in there's a continuous polymerization plant which needs to be revamped. There's amount invested in that, and offline quarter for producing value-added and specialty films. About 20 crore has been invested in that, and then there are various other schemes available there.
Okay. So 20 crore is for VAT, and the rest is for the.
There are various other small projects which are under implementation, but the list is too long. We cannot disclose on phone. So the major two items are revamping of continuous polymerization plant and an offline coater machine.
Okay, fine. And sir, the basic question is on the new recycling project that has been announced. So is there a sufficient availability of the waste that is on the sustainable basis?
Yeah, the waste is available. Our demand for waste would not be huge, and that quantity would be available.
Okay, and also can you give me the debt equity split, and you also said that the funding will be from the market on the equity side. That is
you are talking about debt equity for the JV project, JV company?
Yeah, for the new recycling project that has been announced.
Yeah, so debt equity would be in the ratio of 60 to 40.
Okay, 60-40. Okay. Yeah, okay, that's on my side. Thanks a lot.
Thank you. The next question comes from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Sir, thank you for my opportunity again. Sir, for this loop investment for the JV, when will we drawing fund for it? When will be the first installment?
What? Sorry?
When we will make the investment, start making investment for this project?
I think in the next few months we'll start, the investment process will start.
Okay. And since you mentioned that it will be through a JV, but since it will be all consolidated in Ester, so the finance and...
It will be, no. It's a 50-50 joint venture. So only 50% line consolidation will happen with Ester and 50% line consolidation will happen with Loop.
Correct, sir. And Rastogi, you mentioned about that 20 crore is for the maintenance capex and the balance 50 crore, I missed the breakup. You mentioned about two line items, I think so.
Yeah, continuous polymerization plant, so major revamping in that, and the offline coater to make value-added and specialty films.
Okay, and this will lead to efficiency and higher percentage of value-added films?
Yes, this will help us achieving higher percentage of value-added.
Okay, this year, sir, what was our number for value-added film?
28% of the film in Ester Industries. In Ester Filmtech, there is not much quantity of value-added, but in Ester Industries, it is 28% in 23-24.
And with this capex going underway, what should be the number we will be looking forward?
We are targeting about 30 to 35%.
Okay, Correct. So there is no capacity augmentation. It is only the efficiency and the value addition that will happen through this 70 crore CWI.
No additional capacity per se. It's a downstream process on the film produced in the mill line.
Correct. And Singaneji, just to sum up, you are seeing good green shoots that is translating into good volume traction in our core film business. This is what the sum and substance of the business environment is currently.
We are seeing a good improvement in demand.
Yeah. Thank you once again, sir.
Thank you.
Thank you. Participants, you may press star and 1 if you wish to ask a question. Ladies and gentlemen, we have no further questions at this time. I would now like to hand the conference over to the management for closing comments. Over to you, sirs.
Thank you very much for joining the earnings call today. I look forward to seeing you again next time soon. Thank you.
Thank you. On behalf of Ester Industries Limited, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.